Good morning, good afternoon, everyone. Thank you for joining. So we'll give it a minute or so as our participants join in. I hope everyone is having a great Friday. We are very excited to host our first edition of ARIVE University, where we invited some of the thought leaders in the mortgage space who are going to share their opinions about how to thrive and how to win in today's uncertain markets. So I really want to thank our panelists, our lender partners. They're one of the major reasons why ARIVE is so successful today, for volunteering their time and coming on the session today. This panel was supposed to be moderated by Katie Sweeney, who is the CEO of AIM. Unfortunately, she's on the flight somewhere and cannot make it, so I'm stepping in on her behalf. So the session would be for about 45 minutes. So we'll ask panelists some questions, hear their opinions, some tips and tricks, and we'll keep 15 minutes towards the end for Q&A. So if you have any questions, there's a Q&A tab at the bottom. Please feel free to ask your questions, and we'll give it to the panelists at the end. This webinar is being recorded, and it is also being live streamed on ARIVE Mortgage Brokers Facebook group. So I'm excited to start. Before I start this webinar, I have a quick audience poll. So just to get a pulse on who is on the session today. So I'm running a poll. You'll see that come right in front of you. All this is asking all of you is how long you have been in the mortgage industry and how long you have been a broker. So the first response is, I'm a veteran, I've been a broker for a long time. The second is, I'm new to the channel, but I'm a mortgage veteran. And the third is, I'm new to the mortgage industry. So I will give it a few seconds as responses come in. All right, we have a pretty healthy split between first and third. So we have veteran mortgage brokers, welcome. And we have many who are new to the industry, which is also good. About 40% of our audience is saying they're new to the industry. So I'll give a few more seconds before I stop the poll. So I would appreciate if everybody takes a second and clicks who they are. So, all right, looks like. So I am sharing the results, and the results are fascinating. About 46% of all of you are new to the industry. So welcome. Welcome to the mortgage world. 44% of you are mortgage veterans and brokers, and 10% of you are new to the broker channel. Again, welcome everyone. So as I get started, my first request would be for our panelists to introduce themselves and their companies. So maybe Chris Vinson, you want to start first?
Sure. Yes. My name is Chris Vinson. I'm CEO of Windsor Mortgage. We're actually a little mortgage company out of South Dakota and connected to a community bank called Plains Commerce Bank.
John?
Yeah, hey, good afternoon, everybody. John Gibson. I run third-party origination for Flagstar Bank. I've been here for now 3 years. We're based out of Troy, Michigan. Michigan seems to be a hub for some of us on this panel. So glad to be here.
Eddy.
Eddy Perez, CEO and president of EPM, Equity Prime Mortgage, based out of Atlanta.
Yes, that's me. So Phil Shoemaker, I'm the president of originations for Home Points. We're a nationwide lender that's exclusively focused on wholesale, also based out of Michigan. So.
All right, this would be an amazing session today. I'm really excited. So just to kick it off, my first question to all the panelists is, where do you think the market is today? How do you think the industry is reacting, and where do you see it going in next 6 to 12 months? And will there ever be a turning back? If yes, how far you see that happening? So that's my first question. Maybe Phil, do you want to start? So I'll go the other way around.
Sure, man.
On the spot.
Look, it's a rough market, but what I've seen over my career is anytime there's something challenging, that's where the opportunity is. And so I think what I believe we're going to see is if you look at actually the market this year, I think the latest forecast has it at 2.3 or so trillion, which is roughly half of what it was last year. And so you're going to see a very competitive market for at least the next 6, maybe even 9 months. And I think that if you're on this webinar, you're focused on the right thing, because I firmly believe that we will see a persistent migration of originators into the wholesale channel. And it really doesn't have, it's not, this whole concept of like, brokers are better or wholesale's better in retail. I think that's the wrong narrative. Originators are originators. They're good in retail. They're good in wholesale. It's really more about the platform, and not every company is the same. There's some really efficiently run retail shops that are great. But if you look at wholesale, the fact that as an originator you have choice really naturally creates alignment with the consumers that you serve, and that alignment results in ultimately better service, better pricing, better products. You should really pay attention to data that's coming out. We spent a lot of time working with some of our peers, working with AIM to really try to describe what that benefit is. And if you study the HMDA data starting in 2018, you see a persistent benefit to consumers that are ultimately using a LO that's associated with the wholesale channel as opposed to retail. And it's actually accelerated. If you look at 2021, that benefits upwards of $9,000 alone. And so again, because lenders have to compete to win your business, we're focused on the things that matter to you and ultimately matter to the consumer. We're working on being more efficient. We're working on products. We're working on things that ultimately make you better. Whereas in the case of retail, again, really good retail shops out there, but in that case, the originator only has one choice. And so again, the fact that you're on this call, I think says a lot about how you're approaching this very challenging market. And I believe that we're going to see a fairly significant shift in market share to wholesale. So congrats, you're on the right call.
Thank you, Eddy. Eddy, your thoughts?
Phil covered a lot. What I can say is this. First of all, for the new people that are new to the industry, this is the best time because you don't have bad habits. That's the number one challenge you'll probably see. And that's probably where I could tell you to really focus on when you're building your referral partners, things like that, is ask them what the bad habits are. No return phone calls, things like that. When it comes to a market, I'm not sure if I'd say it's challenging only because it's normal. 4 trillion back-to-back years is not normal. It cannibalized every chance at a refi. It also did something that is really having effects right now that does help the wholesale channel a lot, but bondholders are now showing that runoff is at 39 months. That means yields aren't going to get to 104, 105, 106 again, which means you're going to have to sell fees. You're going to have to sell different things. You're going to have to be more creative. So obviously from having choice and opportunity, that's what is possible there. So, 2.3 trillion is still the 6th greatest year of all time. I don't know how much. Now, is it raining from trees? No. And also, I'm curious to see what it is in units. It may be the 7th or 8th greatest year. I think sometimes people don't focus on units. They look at the volume number, and volume is appeasing, but units at the end of the day is what really drives the consumer experience. And even though volumes are higher, what is it compared to the loan amounts even in 18 or 19 that really, so what is that real volume? So if it's 2.3 trillion, is it really 2.1 trillion in that other market or two? But like I say, it's a very robust time. This is the greatest demographics this country has ever seen. America is the youngest Western developed country. Something like 54% were born in 1981 or later. That's very good for home buying and how many people are turning that 31, 32 age. So this is a great run. It's a little bit normalized. I would say that this is a great opportunity for a reset in ego, because also what you're going to see is this is more of a changing of the guard, because this happened about 16, 17 years ago, and it's usually triggered by some normalizing, as we could say. And you're going to see the older generation that I'm already seeing at day one. Even the older originators are like, I I don't know if I really want to deal with this. You know, I'm a grandfather now, grandmother now. I'm going to pass it on to somebody younger. So it's a great opportunity to learn, get some mentors, and really see a changing of the guard live.
Thank you, John.
Yeah, I mean, I think Eddy and Phil touched on some really good points, right? I think to the point about market and Phil's comments about, you know, the evolution of where we're going to be in 6 to 9 months, I think that's probably realistic, right? If any of us, honestly, if any of us knew the real answer to that question, we wouldn't be on this panel, right? We would have bottled it up, sold it, and we'd all be sitting on a beach having some drinks somewhere if we really knew what was going to happen in the next 6 to 9 months. But I do think, you know, I started back in '95 as a retail loan officer, right? And about a year in, I switched into being a wholesale account executive. And these are the type of markets where, you know, I think this channel thrives from an opportunity perspective. You know, Eddy talks about one of the things I'm always passionate about, because I started straight out of college, right? I had no experience in this industry whatsoever. The company I worked for hired me in, put me through a training program for 60 days. I couldn't even spell mortgage. I didn't know what it was at the time, right? So I do think there's an opportunity for, you know, new blood. Obviously, you saw that poll in the beginning, right? In regards to how many people are new to this industry. And I like in this time to realistically, right, take a look at it, right? Refis, we all know, are pretty much all gone, right? If you look at that, I think it's Credit Suisse that puts that survey out all the time of people that could benefit by refinancing, you know, upwards of 50 basis points. It's at the lowest level it's been since in the last 30 years in regards to how long they've been looking at that. So I think this is a great opportunity for people to go back to what I call the basics in regarding to how they build their book of business, but interject some things, and we'll talk about it more throughout the panel, around social, which, like when a lot of us started in this industry, those things didn't exist, right? And there's some great examples of people in the broker community that are really taking advantage of that and excelling by being the subject matter expert. And then look, the one thing I'll pass it to Chris, right? Because I know he's up next, is I do think you can get caught up in national versus local, right? And everybody has an agenda. Phil mentioned really understanding the data. I think that's key for any originator to really not only understand the data, but then more importantly, drive that down into your local community. Because guess what? Not every marketplace is seeing the same struggles or what the national data might provide. There are a lot of local marketplaces that are thriving. And the economics, if you understand it, and the data points are going to show you that's probably going to continue for the next 5, 6, 7, 8 years in some of those marketplaces. So to Phil and Eddy's point, I would echo, I think it's a tremendous opportunity in the position we sit in today.
Go ahead, Chris.
Well, it made me think about the first time I started a mortgage. You see, I got a mortgage because I was broke, and and this guy came to me and he goes, "Hey, you should do mortgage." And I'm like, "Oh, that sounds really fun, and I don't got a lot of options. So yeah, let's do that." And then about a month in, I'm like, "Is this legal? Because this is amazing, and I am in love with this business." And so the second month in, I walked in and I says, "Hey, I love this business. I want to be good at it. How do I be good?" And he goes, "Chris, it's like this. You're Oscar the Grouch. You got a can and you got a sign out the can and it says, 'You have money for sale.'" And I still have that picture in my office to remind myself that is not how you do it in this business. And maybe being a little bit dumb is good. And I started, interest rates were like almost 8%. And 8 months later, I got a refi. And I didn't even know how to set it up. I had to go to my boss and I go, "How do you set up a refi?" And he had to teach me how to set up a refi. I'm like, "Oh, this is harder." And then I learned that refis became cocaine, and I couldn't get enough of it, and I loved it. And then I would get away from the basics. And I think that my point is that, hey, look, I don't know what's going to happen in the next 6, 12 months, but I know this. I know what I can control. And sometimes we get focusing on the things that we can't control, and we should be focusing on the things that we could control. I can control my daily habits. I can control my relationships in a sense of doing the right things. And I can put myself in a market position to where you can gain a market share. And this is the time that you go do that. There's a lot of buyers right now that couldn't buy before. No one would look at that FHA offer. No one would look at that different letter. And they're like, now you're seeing builders that saying, yeah, I'll look at that. I'll give that guy, I'll take that offer. And I think this is the opportunity to where we capitalize on those, but we also go back and rebuild those relationships that maybe we let go because we were so on the refi train.
That's great. Thank you. So looks like there is a consensus. This is an opportunity. This is the time we can really put, next steps to grow your business, our business. Our company ARIVE is thriving, as we call it, So we definitely think, times when things slow down is a great opportunity to kind of rethink, reset, and think for the long term. So I'll kind of segue into, borrower expectations. We talked about brokers because it all eventually boils down to clients and borrowers, whether it is refi, purchase, cash out, what have you. So how do you think, borrower expectations have evolved in the current market? Rates were in 2s and 3s just a little over a year ago. Now we have 5, 6. So what are they looking for? And with surging home prices, high rates, shortage of inventory, anyone has any thoughts like how has consumer expectations changed when they're shopping for a mortgage?
Well, I'll start because I'm scared to go last with these guys. But I would say this. I would say that the borrower needs more communication than they've ever had before. I would say a borrower feels uncertain. They need to be educated. They need to understand what the market is. And a lot of times our borrower are looking at a long-term rate, and yet they're probably only going to keep it 3 or 4 years. And so simple education, and that's what I love about being a mortgage originator. Like, look, anyone can click and go get a mortgage possibly, but could they get an education? Could they get educated in a sense of this is what it's going to look like, and this is your plan, and hey, I'm going to be with you not only after this closing, but throughout this whole career of you owning a home. And I think that's where the mortgage originator, whether you're a broker or whoever you work for, is the secret sauce in working a database. And I think most originators have gotten away from working their database, and there are so many opportunities inside there. And my dad told me this. He says, Chris, you're a knucklehead. He says, you chase all the new and you never take care of the ones that love you already. And I think the originator today goes, go back, and they got to go back and integrate inside that database better and be able to work that, because there's tons of opportunity. And that is how you take advantage of this time.
Well, and Chris, to your point, I think as an originator, if I'm a homeowner and I'm looking to purchase a home, I'm looking for a mortgage, what value do you bring to my transaction, right? So you talk about kind of the knowledge and the data. What insights are you bringing as an originator? How have you educated yourself? And there's a lot of tools out there, right? In regards to where you can find that data sources you can use. What knowledge and expertise are you bringing to the Harish, in your point, the expectation of the borrower? It's one thing, I think Chris or Eddy mentioned it. When everything's going great and rates are at historical lows, this job's not that hard, right? Like, it's just really not. But Chris, you make a good point. I've said it for a very long time. The time when you should be working your referral base is exactly when you're not doing, right? Like when refis are at abundance, I think Eddy mentioned falling off of trees, right? Loans are just falling everywhere. You're coming off a 2-year. You should have been doing a lot of the things we're probably going to talk about over the last 2 years. So you talk about mining your database. That should be something you're consistently doing throughout the time. But, go back to the point. I think it's as much the buyer's expectations as the seller's expectations that are causing some of the issues in the marketplace too, right? In regards to, maybe still listing at and holding at a list price versus the market data telling you something different from a standpoint of maybe not seeing bidding wars as much anymore. But I think it's communication. I think it's efficiency. And I certainly think it's the value that you bring with your knowledge of the local marketplace that helps drive transactions.
That's right.
Yeah, so I'll jump in. So one of the things that I think you said, Chris, bad habits, right? So people kind of develop these bad habits, and the prior market developed a lot of bad habits. And I think one thing that's really important to remember is borrowers they're not looking for a mortgage, right? That's not their goal. They're looking for a home, right? And so if your approach is to sell a borrower on a rate, you're going to fail. Like that's not That's not how you win in a purchase market. It's not about the rate. It's about getting them into the home that they want and making sure that you're a fiduciary in that transaction. You're putting them in the best possible product and scenario that suits whatever their financial goals are. And so just remember that. I think it's more important now than ever in this market, a purchase market. It's not about rate. It's about getting the borrower in the home.
I'd say something that's very helpful that I heard from Barry Habib, besides his MBS highway that gives a lot of value. Date the rate, marry the home. I think a lot of people need to understand that. Well, it's always going to be the originator in me. I'll miss those days. I still do to this date. But now the privilege of sharing it with so many people, you're empowering and lifting more people, so it's more fun. But what they're saying is bring value, and definitely what Phil and all them were saying about rate, you're going to lose because a lot of times people want to have a connection with others. They don't want to have bad habits. And the really best thing you can do for your consumer is always have a consumer safety mindset. And people are like, what are you talking about? We're not hammering nails. This is a construction site. If you lower the consumer stress, communication, like Chris said, if you focus on giving them real value and look, tell them, hey, we think rates will come down a certain time period. Let's say they don't, but let's say they do. Are you sure you want to pay these points just so you can have water cooler talk? Go look at the break even, go do the math, go show all this stuff, really look at that to really see that. And that's really what's going to give them a lot of value. And also you got to understand different products today and different, every loan's important. So just because they don't have a 740, you can't sit here and turn your nose up on it, because guess what? I've known a lot of people that are first-time home buyers in my career. I've done it even to this date. I get referrals on their children that were maybe 620s that turned into 740s and bought 3 houses, and now their kids are. Because guess what? You may have caught them when they were 25 years old, didn't know any better. So guess what? They didn't know how important credit was, and they hadn't established it. Or, in college, they forgot to send payments every once in a while on their $20 a month credit card. That doesn't make them a bad person. That just, like anything in life, got to make a lot of mistakes. You just got to. That's how you really learn.
Oh, that's fascinating. So it's great to hear everyone's perspectives on how borrowers are today. Again, as an audience reminder, if you have any questions, we have a really amazing panel. There's a Q&A tab at the bottom. Feel free to ask any question, and anyone who asks a question will get 1 month free ARIVE subscription. That's on me. That's on the house. So I really encourage you to come and ask any question. Moving on, I think we touched about many points like, how is this a great opportunity? What can brokers do? You guys touched on that. Can you give some more examples? Like, what can these brokers do to really thrive with the market where it is? We all believe it's a normal market, not abnormal. So what practices, what tips they can use to grow their business and to thrive in today's market?
Million things.
Yeah. So maybe what are top 5 things? Let's go with that. Eddie, what are the top 5 things if you can think of, and others can kind of add as they can think of. So.
Well, Chris was going to go. Let him go.
Yeah.
Oh man, you're gonna put me on the spot.
No, I mean, I'll go on it. I was just the last one to talk. I'm not trying to hog it or anything. Trying to be respectful.
I think that, we talk about getting in the back end, the basics, and if you're new, you're like, what the heck are you talking about? But I think acquiring the 50/50 list is super important. And number one thing is that, are you working 40 to 50 real estate relationships? Number 2 is that how you're interacting inside your database. Look, the average LO tries to sell all the time and not find spots to where they can implement. And the one thing as a broker, if you're an originator today, the one thing that you want is that if we think of toothpaste, we want them to think of you like Colgate or Crest. If you ask somebody, hey, give me 2 brands of toothpaste, it's normally Colgate or Crest or we'll say Sensodyne or something. But look, buying our customers' mindset to saying, I'm going to refer is the key point, and being able to interact in those key points of their life of just saying, hey, cool, saw you got a new puppy. and you send a little cool little dog toy, or they had a birthday or an anniversary. It's like interacting inside these customer bases is extremely important today. But look, a lot of originators today look at a list and they say, I'll call. And then they say, who am I going to call? Who am I not going to call? And I think if you're just like me, sometimes I don't want to call because I make it about me, and you got to make it about them. You have a lot of value to add. You have a lot of industry knowledge, and to actually call your customers today, or even realtors, and ask them what their 5-year vision of home ownership is, it is amazing where that conversation goes. And so we don't have to make this super difficult. It's just activity gains activity. And to the point of the 620, the 620 is your best referral source. If you do one favor for them, they will definitely refer you, and they know 740s. It's not like 620s hanging out with 620s. Like, hey, what's your credit score, bud? Oh, hey, you're higher than me. We can't hang out. That's not how real world works. And so 620s know 740s, and it's a great way to make them an awesome referral source.
And to your point, Chris, what I've gathered and seen over the years is when you take care of a 620, they've got family that's higher who respect you even more. So then all of a sudden you have a 740 that's not shopping, even though they can get a loan from Kingdom Come because you paid respect to their cousin or their aunt or their nephew or their niece. So yeah, I mean, totally. That's one of the big ones is, I guess the best way to grow the business right now is take action. It's wide open. Half the people out there, or half, I'm being generous, are doom and gloom. The world's ending. Okay, go in with a positive attitude. Like I said, some of the new people on here, you have no bad habits. That's phenomenal. You think it's great right now. You think this is normal. I mean, it's kind of like Chris earlier before he discovered refis. One day there'll be that where you discover, oh my God, this is phenomenal. This is so easy. So, you got to really look at that. Like, I'll tell you this, one clear point, go start building relationships with builders. Because even if they have a mortgage company, I'm going to be honest with you, they have no idea how to do any loan that has a little bit of hair on it. And when I mean by hair, I mean 700 and below, or even any Govy loan or anything of that nature. And they absolutely are taking offers from everybody, like Chris had said earlier, because guess what? They're a construction company. They're not a mortgage company. They got to move product, and they got to move it now, because that interest machine does not stop.
Right.
That is one I'll say right there.
Yeah, I tag into what Eddy and Chris said, right? I think, look, in this type of market, the first thing everybody reacts to is, oh, I got to go call on a realtor, right? Like, it's a purchase market. The only way I'm going to get a referral for a purchase, unless it's a book of business that I'm going back through past clients, is I got to call on a real estate agent, right? Well, guess what? Everybody's calling on a real estate agent right now. And there are only so many of them that are producing. There are only so much inventory. Eddy, you touched on it. One of the things I had noted about in this one was kind of like what I call affinity marketing, right? Like, who else are you reaching out to from a referral source? You mentioned builders, right? And again, it sounds silly to say this because we've all been in this industry a long time, but back to the basics, the attorneys, the accountants, the builders. Have you gone to any of your local big employers in your marketplace and talked to their HR person about setting up something for anybody within a company that is looking to get a mortgage, right? I think that's huge because it separates you from your competition. And there's no better way to get a realtor referral relationship going than to walk in, quote unquote, to a real estate agent and give them a lead, right? So it's easy to say, I'm going to go generate purchase referrals by calling on realtors. Everybody's doing it, right? So how you make yourself, set yourself up different. And to me, I think that's one of the things I know when I did it, some of my best referral sources were builders, accountants, and financial planners.
Yeah, it really is. I think you guys have hammered the referral piece. I won't elaborate on that. I totally agree. It's a numbers game. The more connections you can create and the interactions you have with those connections, that really is the name of the game. I'll pivot a little bit, because I think that based on some of the questions, there's probably some broker owners on the call. I think that there is not, this market is going to be one of the best markets for you to grow your overall company. And I think, you know, the way you do that is pretty simple. Like the discussion we just had around, you know, kind of at the originator level, it really is a numbers game, and it's about attracting, hiring quality loan originators. I would be heavily focused on kind of honing your craft on that. And I do think that, again, the fact that you're on this call, I think you all clearly understand the how awesome wholesale is, and the advantage that it's in traction is clearly gaining. You know, there's a lot of misnomers out there within the originator community around wholesale. I think a lot of it stems from, you know, pre-crisis, you know, type stuff, like that for some reason brokers aren't able to support purchase, or brokers aren't able to, you know, provide the level of service that originators can get in retail. And I can tell you, it's just not true. And the reason it's not true is because you have choice. And so the way you want to go about recruiting these LOs is you should be very confident in your ability to sell your platform, and how you can compete on service, how you can compete on price, how you can compete on product. Because of that choice, you have lenders that focus on certain products. And so you don't have to go through this product development thing that retail companies do to provide a diverse platform of products. You can go to a lender, get approved, and then within days, you're supporting the product that you need to you know, assist your customer. And so as an owner, really focus on attracting and hiring quality LOs. And I think there's going to be a lot of them available in the retail channel.
Thank you, gentlemen. So we have a flood of questions which have come in. Some of them are relevant, so I'm going to take some of them now. One of them, you know, Phil, you answered. So a lot of brokers are asking, you know, how do they attract talent from the retail channel? I think Phil touched on a lot of great points. Does anybody else, you know, Juan Torres and others have asked us, like, what can we do to attract loan officers to their channel from retail? Anyone else has any thoughts?
I would say, look, I love the give, ask. If you're going to become an attractor from attracting realtor or loan officers from the retail channel, the number one thing is that what are you doing to give back to that area? Are you educating? Do you have a plan? The truth is that there's so many originators out there in the market with no sense of plan. They don't know what a day-to-day looks like. They don't know how to win on a day basis, week basis. And look, most originators concentrate on the result. And the result is how many loans did they close for the month? And the truth is that they need to be concentrating on what's the daily activity to get to the result. Because when we concentrate on the result, we miss what the daily activity was to get to it. And if you can create the plan, you will be a huge attractor. Plus you will have price, plus you'll have product, plus you'll have options. And realtors today, they're looking for all those things because they need as much options as possible to put those borrowers in that house. And that's how you're going to attract additional originators. Plus, I love the junior loan officer model. I love taking someone that's young, talented, drive, and has got the ability to be able to do it. Look, the newsflash, mortgage is not that difficult. You can teach this business, and you can bring in the youth who will go out there and dominate. You can go out and get somebody. Sometimes when they stink, they always stink. And making sure that they're the right fit on the right bus is critical for your company. So don't make a mistake. I made a lot of mistakes in my life. I lost my hair over this business. John, did you?
I did.
Okay, yeah. And listen, that's from mistakes and hiring the wrong originator that I thought would make it, and they came from somewhere else. Sometimes I realized, yeah, I can't change it. And so I would say hire, but be cautious and go slow, and make sure you're hiring the right fit for your company.
So Chris, one of the newer LOs is asking, a few of them are new to the business. Like, you know, when you're starting out, your database is not built out, you know, you're new to the business. Realtors are inundated with calls from seasoned experts. How would you go about marketing to your referral partners if you're new to the business?
Yeah, so the first thing is that please go to your phone, go all the way to the bottom and tell me how many contacts are at the bottom. All right, voila. Maybe it's 1,300, 1,400, or you're crazy and you got 20,000. There's your start of your database. The second is that you lean on your family and friends to say, I'm building a database that I want to be able to put into play. So you're going to get married. You're going to invite people to this wedding. Who's it going to be? That's the start of your database. And lastly, people love to help people. So when you start to count on those people that are in your phone to be able to build that list, that's how you get it. And then all of a sudden you've got 400 or 500 fans that you can start to work on. It's all a process. You can't do it overnight. But what if your goal for a win for the week was to add 20 people to your database? And that's what you concentrated on. And that's what I'm saying is concentrating on those things and not how many loans you closed will get you to the end. And I think like many golfers concentrate on the process to get there, right? Not how many wins did they do. And that's how they always stay consistently at top.
Yep. So I think there are many questions around this. I'll try to summarize them. People are asking, our audience is asking about builders. Builders have in-house lenders that give huge incentives. Any tips and tricks you guys can give so they can start building relationships with them. And, when they walk into a realtor's office, how do you introduce yourself if you're new to the business? So anything anyone else can add, like as you're walking into their offices, or calling them, how do you introduce yourself? And how do you compete with builders who have in-house lenders?
That's easy if you're going to compete with builders that have in-house lenders. Because like I said, they don't want to do anything usually below 700.
I got something on that. So
that's an easy one.
Well, that's true. So one of the things that we're trying to do at Home Point is, rather than kind of chase some of the niche product stuff, which there's a lot of really good lenders out there that do that you should check out. We're focused more on things that are kind of additive to the the agency and government, the 90% that's out there. And we actually came out with I'm sure there's other lenders that have something similar, but we call it Home Point New Build, where builders are always looking for ways to finance new deals. Like they're always looking for, especially like there's a lot of banks that finance construction, projects and whatnot, but at times that can be, there's certain projects that just don't fit, and so what we did is we have a partnership with a company called Level, where you can actually, if builders in your community, you can make that introduction and you can help them obtain financing for their projects. And the way the product works is you then get to be their in-house lender, right? And so this is something that typically you only see in retail, right? Where you have builders have kind of JV or relationships, or they have in-house deals. Our goal, what we're trying to do, and like I said, I think there's other lenders that are out doing this, is like try to replicate that, where you as an LO in wholesale, or you as a broker owner can kind of be that in-house lender for that project. And so the way it works is you connect them with the relationship, and then we're through that connection, we're able to offer back an incentive to about 50 basis points, such that you can kind of market yourself as that in-house kind of lender for that builder. And so again, it all comes down to choice. And your Home Point's just one example of this. Like wholesale works because there's a whole bunch of lenders in there that are working on different little things like this to give you an edge. So I would say understand those options out there with the lenders that are operating in wholesale and what they're trying to do to support you.
Yeah, and look, just to tag on to one other thing too, right? A lot of times when you talk builder, and I know there's several questions about, hey, how do you compete? They have an in-house lender. Those are typically your bigger builders, right? Your Tolls, your Ryans, those people. Do you, as an LO, do you know how many localized custom builders are in your marketplace versus the traditional trying to walk in on a weekend to build a relationship for a referral from a Toll Brothers, NVR mortgage type of thing back in the day, versus going after a more, maybe a smaller size builder, a custom builder? There are thousands of them out there. And, to Phil's point, we have our construction program over here, a little different than what he mentioned, but similar in some regards. And a lot of that production comes through just that, right? The custom builders, not necessarily your loans coming through the bigger builders. So maybe focus a little bit smaller versus focusing as big as well.
Yeah, I'll just add one little tiny thing is that we're starting to see a shift of the connection with the lender inside in-house and wanting more options. And that's you. and you are more options. But the easiest way or a tactic to be able to go in there and, understanding who is the one referring and how that whole system works with inside each that builder is different. And so once you get connected with that person, the easiest way is to two-step it in. And so what do you love about working with your current in-house lender? And if you were in charge, what would you change? And you concentrate on what you would change because that's you and what you could provide as added value. Is it construction like Phil and John said, providing another option? Or is it just simply being able to get that borrower into that home, which is, by the way, normally the rep, and they get paid when they sell homes. So if their in-house lender can't do it and you can, you're going to get the referral. And I think that you're seeing more of a shift of that because they're getting pretty cookie cutter with the current builders, and they're kind of picky on which ones they want to take, and you could come in and get the rest. So yeah, we all got to get maybe a crap deal every once in a while, but that's how we get started. And then you work your way in to get the cream.
Thank you. Erica is asking a really interesting question. With so much information or misinformation available out there, what platforms, podcast would you recommend we read or listen to as newbies to stay on top of market? I think Eddy mentioned MBS Highway. Are there other podcasts or information sources you would recommend they can listen in to stay on top of market?
Yeah, MBS Highway is a good one. MBS Live is another good one. We use that. There's a lot of people on our team use that. I think those are probably the two better ones out there.
It's going to sound boring, but go read the FHA, VA, and Fannie Mae manuals. I'm not trying to be funny. I'm not trying to be funny. I've read them all. That's how I know about guidelines and what works and what doesn't. That's going to make you very powerful. I'm just being honest, because most originators still are not sure if there's a T in mortgage. And, that's a lot. It's boring. It's long. But the question is, do you want to be great?
I think Phil mentioned you mentioned MBS Highway, MBS Live, reading the handbooks. I know, something that I subscribe to that I get every day on the email every day on is Morning Brew. I don't know if anybody's ever heard of that before. Pretty good. It's market specific, so it's not mortgage specific, but it certainly is educational from a standpoint of the economy and understanding, how that factors into our business. That's a good one.
All right. So I'll also add, there are a lot of local events that happen, go network with your peers. There are a lot of, EPM had an event last week. So we have a lot of these events and brokers will tell you the real story. That's one good thing about mortgage brokers. They're really good at sharing knowledge. So one of the things I suggest is be in the community, go out there, meet other people and ask them what do they think and what are they reading or listening to. All right, moving on. There are some questions regarding borrowers. We touched upon borrower profiles earlier, like, do you see many foreclosures happening in 2023? Other people are asking, are there any significant changes to the profile, such as millennials entering the market, Gen Z borrowers coming up? On the borrower personas, do you see anything changing or happening in coming years?
Yeah, I'll start out. So look, the one really good thing about what we're going through here is this is nothing like the financial crisis. Like I think Eddy was talking about, it's really more about the contrast of, you can't go from like the biggest refi boom ever to a normal market and have it not feel just really painful. But if you kind of put it in context, I mean, the credit quality of the industry as a whole has never been this good. And you really have, it's been very responsible lending standards. And even though I think a lot of the, some of the regulations that occurred as a result of Dodd-Frank, I vehemently disagree with, like regulating LO comp and things like that. But there was a lot of really good things that came out of that, right? So you have, QRM or QRM, you had the, appraisal independence. And so you have a really good structural things within the industry that I think are going to keep, what happened before in 2007 from happening again. And so to answer the question on foreclosure, I don't see there being any material spike. I mean, if you look at where they're at today, I mean, it's really at an all-time low. And it will go up for sure. Right? There is a normal level that we need to kind of get back to. We're still kind of bleeding off some of the COVID, incentives and programs and things like that. But I don't think you're going to see a major crash on that.
I'll kind of just piggyback onto Phil. I think that's true. And also look at how much equity everybody has today. When you have this much equity, you probably don't have as much foreclosure. You got skin in the game and you got opportunity to sell. And so with those things, it totally makes it way different than in the prior years or any type of where you're trying to relate it to another year. But look, there's our debt is rising and they have more equity. And so opportunity for cash out probably will come into play. I think we're all looking at as for lenders, that that's a play that if you're not playing it, maybe you should. And using that equity correctly and being responsible to lead that borrowers into the right decision. Look, what's the most important? They said water cooler or bar talk of your interest rate or how much you're spending a month. And sometimes health is wealth. And being able to set that borrower up with the right payment is more important than what that rate is.
All right. Thank you, everyone. So we have this really interesting question being asked by many. How do you target non-traditional borrowers, real estate investors, and what do you see as the future of DSCR market? So the reference is to non-QM programs, which have become pretty popular, I guess.
Yeah,
so
I can jump in. Look, I think that non-QM is not going away. I think DSCR is will definitely be a product that will persist with time. I do think that you've seen because of how hot the housing market got and the level of home prices and the speed at which they accelerated, you did see a massive shift of the overall market towards investors, right? And so saw a massive amount of investors just gobbling up properties. I think that's going to moderate a little bit. And if you kind of look at the non-QM market as a whole, I don't see it ever becoming like it was pre-2007. I think it would be very hard for that to exceed 10% of the overall market. At least with the way that things are currently structured with Fannie and Freddie and the different government lending programs, but it will always be there. And so again, another benefit of wholesale, right? You have access to literally all of these products, and all you need to do is just find the lender that provides them, because there's a lot of really good lenders out there that have developed their business around non-agency or non-QM products, and it's very easy to get set up with them.
Yeah, I would actually reverse the question and not how do I find those borrowers. I think to what Phil has said and a couple other people have mentioned, I mean, Eddy joked around about reading the handbooks, right? But
no, it was serious.
A lot of us when we got in this industry did that, right? That was like when it was a training program out of college, I had to read those books, right? So I think you reverse it though. It's not how do I find those borrowers. I think to Phil's point, right? If you're a broker owner, you need to make sure that you're signed up with the investors that can satisfy the needs of your LOs from the standpoint of the borrowers that they're coming in contact with, right? If you're an LO on this call asking that question, I'll reverse it to you and say, it's your job to be educated on all the different product types that are out there. So Phil was talking about non-QM, so that when you're completely educated, and maybe that's 10% of the market, to use Phil's example, but 1 out of 10 borrowers that you come in contact with that get referred to you in some form or fashion might not meet the agency credit box, where non-QM becomes a viable option for them to, and I think Eddy said it, right? Get in the home and date the rate, but buy the home. You need to educate yourself. So I reverse it around and say, make sure that you're able to have the knowledge and the conversation with the borrowers you come in contact with. It should just be about how am I going to get in contact with borrowers and referral sources, not specific types of borrowers. You need to keep your funnel very big and then be able to be a subject matter expert when you're in front of that individual.
All right, we still have many questions coming in. We only have 10 minutes left. I'll try to take as many as I can. What are some of the good recruitment tactics? I think we touched upon that, but you would recommend to get quality loan officers. And what are some of the retention strategies you guys recommend so you can retain top talent?
I'll take it. That's easy. The greatest opportunity right now for wholesale to recruit is the P&L model in retail.
Yeah, agree with that.
I'm just going to tell you that because there's plenty of retail people you're not going to penetrate if they're corporate retail because they run it very similar to wholesale.
Yeah.
But the P&L model has a lot extra baked in. Essentially, that branch manager, unfortunately, is what I would call an entrepreneur. They'll tell you they're an entrepreneur, but they have no risk in the game and only the upside. And that's not an entrepreneur. That's a entrepreneur. And that usually lays a lot of margin on there. And I only know that because I was once from that lifetime.
Yep.
So it's not like I say this from a self-righteous. I come from wisdom here. Those originators usually don't get a whole lot of support. So I remember, I'm not sure if it was Phil or John or Chris, somebody talked about the support you're going to provide them. Originators at the end of the day have families. Consumers have families. That's where I say, and it is a large amount after the financial crash because the P&L model, and it got called that because of Dodd-Frank, just replaced the net branch model.
Yep.
And that is where it is wide open. So everything you're seeing out there, that's where they're all coming from. You're not really taking it from the people that I know that run real corporate retail. You're not. I mean, here and there, but like somebody said, like Chris said, are you sure they're really that good? So maybe you want to try somebody new. Like, are you sure they're always going to be a 1 or 2 person, but every loan is important because that's how they pay for dinner? That's what I would tell you is if you start talking to originators and they're in that model, I'm just telling you, it is beyond wide open.
Yeah, so I'll jump in. So one, understand the benefits of wholesale. It's about choice. You should have confidence when you talk about your ability to compete on service, on price, and product. Like be confident in that. But recruiting is purely it's a numbers game. It's really not an art. It's a science. And to me people I see approach it as though it's more of an art. Like it's not about like following up with someone and meeting them for coffee, once a month and saying hello and talking about their kids. It's about creating a meaningful interaction with them in a way that builds a relationship and trust as fast as you possibly can. And so it starts with this. One, figure out a data source, right? And that could be, we use, a CoreLogic. A lot of companies use CoreLogic. There's Eddy or John or Chris, you guys probably know a lot. What's the one that
MMI?
Yeah, MMI. That's there's
MMI.
Yeah. So there's some really good tools. I'm sure Harish can get you details on it around how you can understand LOs that are productive in your markets and the agents that they're affiliated with. You can actually go ask agents who's their favorite LO. But the key is make sure you know who you're recruiting, right? Because not every LO is created equally. And the last thing you want to do is go recruit an LO that was really, really good and doing a bunch of refis in the last market, but you pay them money and you bridge them over and they can't compete in this market. So make sure you have the data, make sure you know who you're going after and make sure that you have structure in how you engage them, create a process around it. It's about interacting with them, connecting them to other people within your shop, within your company, building that relationship, and doing that over time, right? As opposed to something that is just kind of, don't just meet for coffee.
Yeah. So Phil mentioned CoreLogic. Eddy and I kind of threw out MMI. Model Match is another one.
Yep.
They have some really good.
Is there another one called Six Solutions or something like that? I've heard of something. There's something solutions as well.
There's a
There's
lot of them popping up, man. They're all kind of based on the same underlying data structure, but
Yeah.
they're really cool.
Yeah. Model Match is pretty good.
Yeah.
Phil and I have known those guys for a long time. And I just saw a demo of something we're probably going to start doing with them. And that to the point of recruiting from a retail perspective, if you were a broker owner, right? Recruiting retail loan officers, to Phil's point, you got to dig into the data though, right? Like understand who you're talking to as you're building that relationship, because these people could have been great over the last 2 years, but they've been in it for 10, 15 years. Go back to 18, 17, 16, see how they did in those type of markets, not how they did in the last 2 years.
And to Eddy's point, understand the platform you're competing against. Like you gotta,
That's right.
Because if you're engaging them, you got to understand what they have today and how to create the contrast of what you can add value for.
Hey, I'm gonna put one more plug on this, Harish, on recruiting and hiring. So when I was up in New York secondary, we had meetings with several clients, and at least 4 or 5 of them have done what I mentioned earlier. They've hired 5 to 10 kids straight out of college. Eddy's mentioned it, right? This, and Chris mentioned it. This isn't rocket science. We're not splitting atoms around here, right? And they're investing in those people, and they sent benchmarks for them to get licensed. And if they're not meeting the requirements, they cut them loose. But I'm going to tell you right now, a couple of those clients, there's 4 or 5 people that have gone through it. These kids are producing and they're hungry, right? We need new blood in this industry. It's a very old industry. It's aging every year. We need new blood. And if you have the wherewithal from a business strategy to see out 5, 10 years from now, these people, in essence, you go down that path, they could be some of your top producers in the cornerstone of your company moving forward.
So Christian is asking, is there a way to find out which lender is running P&L retail model? Is it, if you see many branch manager, is that the sign, Eddy? Like, how do you know someone is running a P&L model so you can go after them? So
I have the list.
that's a good one.
Well, it's my research over 10 years. I'm not joking. I have it. I have it. I know it.
But all right. Yeah, again, thank you. Again, we are kind of on the top of the hour. I do want to ask a couple of questions, which I have
Harish, you want me to share it with you?
I'm okay. For the brokers, if you want to share. So Christian
I'll
can
share
do
it. I mean, it's not public knowledge. I mean, I could just sum it up for you. I don't mind, dude. It's all information.
Yeah, no, I can. If you're okay, I can share it with whoever wants.
I'll text send it to you. It's a
Okay,
list. It's like 40 companies. I'm not joking. I'm not trying to be funny.
Thank you. That's the benefit of having all of you guys around. So last question, I guess, from my side would be, you're running very successful lender companies, wholesale lender companies for a while. Give us your spin. Why should a broker work with you guys? What are the unique offerings you provide as your business to brokers? Anything new and exciting which is coming out in next 12 months that you want to share with our community? Maybe I'll let everyone answer this. Chris, do you want to start? I'll go left to right.
Oh, you let the little guy go first. Hey, look, I think that I think all these guys, Eddy, Phil, John, they're amazing companies. They have amazing things to offer. What makes me different? I'm really good at a bridge loan. I got a high give a dang, but so do these guys. And I think that, it's unfair to sit here and say, I do this better, I do that better. But I'm a broker at heart. It's what I love. I love coaching and teaching originators how to get to the next level. And I don't think you go wrong working with any of us, but maybe the secret sauce is you work with all of us. And we all have all kind of little tiny niches where we're really good at. And that's what makes the power of being a broker, just like the whole kind of the theme of the call is that, there's all kinds of little tiny things that come into play and there's changes. And yeah, I've got some cool things coming, but so does Eddy, so does Phil, and so does John. And, I just feel honored to be able to even be on this call and to be able to fight hard for every deal. Because at the end of the day, when the consumer calls and he says, what's your price? Really, he wants to know, can you take good care of me? Can you get me to the closing table? I've known about somebody that had a bad experience and I don't want it to happen to me. And I want to make sure that your client doesn't have that bad experience.
Yeah,
Chris, your company offers contract processing, if I'm correct, as a service. Is that accurate? You have something unique, like you can actually process files as a licensed bank. Is that?
Yeah, I mean, that's probably one of my stupid ideas that maybe my staff doesn't really like, but hey, look, it's hard to be a broker. It's hard to manage metrics. It's hard to be able to get your cost to originate down. And that's why companies like a P&L model, because it's easy to be able to walk a bunch of expense onto you. And then you're like, well, I didn't make any money. And you're like, well, yeah, duh. You don't know how to know your metrics. And so that's why I think being a broker, but being educated is probably the key to this next market.
Right,
Yeah, I think
John?
that's, oh, good. Sorry, go ahead.
Yeah,
Go ahead,
go ahead.
Phil.
I was just
Go
saying, I
ahead.
think that's really well said, man. Like, look, you got to work with multiple wholesale lenders, right? And I will say, like it's not Highlander. There's not like there can only be one kind of thing. Remember that? Like it's not that. Like if that's where wholesale goes, wholesale is dead. If it ends up with one lender, it's dead. And so it's very important that you, for your own sake, that you diversify your risk, your exposure. You work with multiple lenders, and that gives you the stability that I think you need to run your business. In terms of Home Point, look, we're focused on supporting you from a purchase standpoint. So our main goal right now is just making sure that it's all about speed, service, communication. Outside of that, I do think that Chris had mentioned it earlier, that home equity is at an all-time high. With rates where they are, cash out might not be the right thing right now. It will be in the future. And so we're working on a HELOC product that we're going to be as a lender. So it won't be like one of the fourth party deals that you see with like a Symmetry or TCF. It'll be a Home Point product where you'll be able to offer that as a bridge to when rates eventually do lower, and then you get that second transaction and cash out. That's probably our main focus right now from a product standpoint.
Yeah, and I would echo Chris and Phil, right? And I think that's both well said. And I think the point is there's a lot of good lenders out there that are dedicated to the broker channel and here to help you thrive and succeed through this market and beyond, right? And I think the idea, I echo Phil and agree with him wholeheartedly, the idea of using just one or two particular lenders, I don't know if that's in the best interest of this community at all, right? Because there's a lot of us that do a lot of really good things. And like everybody else, look, at Flagstar, I'll say it just because I think it's out there, right? We've been in the space for 35 years. We continue to evolve. We continue to enhance from a technology perspective to provide the best possible services that we can. One of the things we're obviously focused on is what Phil mentioned. We've just rolled out our HELOC. We are the bank, right? So it is our HELOC. We're out there 16 days into it. We're seeing tremendous results with that already. So there's a need for it, to everybody's point, where cash out might not be the option. Why get out of that 2 3/4, 3% rate when you can take a HELOC? So there's that, and we'll continue to push the bucket on product, right? We rolled out our recent version of non-QM with more coming. We have our specialty lending group on the construction side. But in the end, it's really about just providing the best possible experience for you when you send a loan to Flagstar. And we're going to continue working on that every single day to help support you.
I guess I'm last. A lot of great people out there, a lot of great organizations. I'd say, kind of our perspective at APM is we've always been more of a full array lender. There is this perception that we only do the tougher loans. No, we just do them well. There's a difference. And I know sometimes people question that because they're like, this took that. Customer was a little challenged. Okay. But we communicated, we did it all. But, we do the 8-paper stuff. We do all the loans because we have all those approvals and we retain 100% of our servicing. So that's another advantage because we do keep it on our books and things like that for the mortgage servicing rights. That's one of the things, like I said, is, we do the tough loans because I believe a lot in the first-time home buyer model, because the first-time home buyer turns into the second-time home buyer, turns into third. And that's one time, regardless of what's going on right now, that will persist regardless of interest rates. People do want to get into a home. Rent is extremely high out there. So that's a lot of what we do. We do a lot of renovation loans. These are all the things that I believe set up for real relationships, because it's really about how you're pouring in to your culture. And anybody that brings you a loan is a part of your culture because they believe in your vision and everything of that nature. Does everybody? No, some people just use you. That's just the facts. That's okay. A lot of the people that do count on you and you count on them together. So it's a mentor-mentee relationship, which is a full circle, is what I say that, so I say we're a full array lender because we do have a lot of things under our hood and we separate them out. So not the same mix with the others, because even from an ops standpoint, conventional loan underwriter is not the same as a govy.
Right. So we saved the best for last, Eddy, maybe. Thank you so much again for your comments. And again, I really appreciate everyone joining in. We're a little over time, but this was a really great session. This was our first one, and we'll be having more of these in coming months. But thank you again for the panel, for your time. And thank you everyone for joining. Have a good weekend. Thank you.
See you guys.
Everybody.
Harish.
Thank you.
See you guys.
See you guys.